everyone, it is Evan here from the Trade Risk on Tuesday, October 16th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So we're going to jump right into charts here with the S&P 500 cash market weekly time frame. Each bar represents 1 week worth of trading, and the bulls are off to a nice bounce back, a nice recovery this week. So far, we are up 1.58% on the close here on Tuesday. And if we zoom in and kind of look at this week's candle so far, we are heading higher, of course, closing Tuesday session right at the highs of the week. And it looks like, you know, because last week was such a large range to the downside, this big expansion in range to the downside, it looks like we're going to have an inside week, barring some either total rollover here or a major acceleration higher. Chances are we are going to kind of close above last week's lows, below last week's highs. Of course, that could change, but it looks like we're setting up for sort of an inside week, maybe a little volatility compression as the market sort of catches its breath. But it's good to see at least at the start here that the market isn't continuing the pain lower. We're getting that recovery off of some very short-term oversold levels, and we are holding on to, as we look here at the long-term chart, if we were to switch to this view here, this trend line, which extends from the 2016 lows for the S&P 500, the long-term trajectory that we've been trending higher in, continues to hold. We tested it in January, February, March. The market sold off to this general area. We are back to it as of last week, and again, seeing like we're holding it so far in early trading this week. So that is a near-term sort of win for the bulls. We are back above that nice round 2,800 level in the S&P 500, which has been an important level over the course of this year. Let's go down to a daily chart and kind of look at this this general action in this general area here. So this is now a daily chart of the S&P 500. You can see nice strong close here for the day, and we are back above this little band, this 2,790 to 2,800 level. Reason that is drawn on the chart is because that is where the market topped out in February, March, and even in June of this year. So when we had that early correction in the beginning of this year, we ended up selling off all the way down to about 25.30. We then saw a strong rebound and failure into this 27.90 area in late February. We then pulled back and then put in a higher low and tested it again up here around 2,800. Ultimately, that failed again, and the market pulled all the way back, chopped around, and eventually got back up there in June, failed again, and then eventually we saw that breakout in July, August of this year. We are back above that area, so that is important. That's good, constructive from a price action perspective. Nice to see the market closing above that key psychological level. When we zoom in, however, and we look here at this action and how everything's unfolded, we still have a very damaged market here in the short term. Make no mistake about it. Today was a wonderful rally. Breadth was strong. Saw good participation. It was very nice to see, and it very well could be some type of V-shaped recovery where this market doesn't look back. We just did a very capitulative sort of fast washout, and it just continues to ramp here into the end of the year. That is obviously a possibility. But generally speaking here, when we look at this structure of the market, we still have a very steep downtrend that started, just of course last week. The sell-off was fierce. Momentum, you can see getting to new lows here and really moving into bearish territory over the past couple of days. And you can see we're starting to sort of unwind some of those extreme oversold conditions. And, it's going to be still, still on the bulls to prove that this bottom is for real and that this is in fact a bottom to begin with. So while I do think today's action is nice, and I certainly think it could continue into even tomorrow or the next couple of days, we still want to be cognizant of this major damage that happened here back below 28.72, and that's really, and again, that is just to give perspective here, that's still about 2% from where we closed, 2.25% from where we closed today. But that's really the level I would love to see this market back above to really regain some confidence, getting several closes above there and seeing volatility start to shrink back down. That is what's going to get me more optimistic on this market. In the shorter term, I still think it's a trader's market right now. Volatility still remains elevated, even though it did come in nicely today. I do think this bounce could continue. continue, maybe even high to retest this 2872 level, but that'll be the decision point. And, you know, generally speaking, I like to see those retests of lows. So I would like to see eventually a retest of this 27, what do we call it? 2710 was the ultimate low, but somewhere around 2730 to 2710, I'd love to see that tested just to, you know, give us some confidence that it in fact will hold on a retest, and that would give me some more confidence again that a short-term bottom is in place. So for me, nice bounce back, nice rally today, certainly can continue, but I don't think we're out of the woods yet. I do think we could enjoy some more gains here, but you know, let's still be aware that the market did just kind of throw a fit here and really break down and cause some technical damage. These things generally aren't repaired in just a 1 or 2 day rally. So let's still keep ourselves on our toes. If you got bailed out of some positions today, you know, certainly make sure you make those adjustments. Don't let it happen again. All the good stuff to keep your sort of trading strategy intact. So that is the way I'm sort of looking at the S&P 500. I mean, ideally in the short term, again, I still think it is constructive there that we're closing above 2,800. Maybe some sideways, see that volatility come down, and just maybe a consecutive many closes above here would be another way to sort of work off this technical damage through time. I think that is a scenario as well. There's lots of course, possibilities out there on how this market, on the path this market may take. But as always, we should play defense first and you know, and opt on the size of being conservative just to make sure we don't get rolled over on a potential rollover. So that is what I'm looking at for the S&P 500. Russell 2000, again, nice to see this coming back for sure. But still, again, when we look at the structure here, this is still a very fierce downtrend that had really taken place and unfolded over the past many weeks. We got a nice rebound today, 3% almost, but still there's plenty of technical damage and momentum pent up to the downside. So while I do, again, think we could enjoy another couple of days here on a rally, let's still be careful chasing. Let's be mindful of the damage that has occurred, and let's play defense first. Getting back above this trend line here would be nice to see. Getting back above 160 would be nice to see. So both of those things would be there constructive in the short term for the Russell 2000. And of course, you know, one gauge you can kind of throw fibs on here and start to figure out where we are in the context of this pullback, or on this bounce back, I should say. You know, if we were to measure from the highs here, back from let's see, all the way up to about 173, then you can see that we are about, let's see, about not even at the 38.2% retracement here for the Russell 2000. So still a fairly shallow retracement so far. The S&P 500, I think, is a little further along here. It hasn't suffered as much of a pull as a drop as the Russell did. But if we measure the S&P 500, you can see we're above the 38.2, but still not quite at the 50%. The 61.8%. It comes in around 28.55, so we can start to measure sort of the pullback, the bounce here, and look at fibs there if that helps you guys, for all you fib traders out there. And finally on the Qs, if we take a look at here, we can see, again, a nice move today, almost 3%. We're getting back above the 174 area. We held 170. We talked in our weekend video that this was the slightly more optimistic market here. The fact that it didn't completely roll over from this 170 level, I believe it held on to its 200-day. So there was more to like there. And if I look here, aftermarket, it looks like we are gapping up already. So we had some earnings announcements, probably Netflix. Let's take a quick peek at it. Yeah, so you can see this is live as we're trading, as I'm recording this, but Netflix reported earnings after hours. You can see it's trading at $3.93 at the time of recording this, so about $50 to the upside, and threatening to take out these September highs here. So if those gains can hold, if we can get through that conference call, gains can hold, some of the other earnings that are coming out, the Qs here could very well see an extension of this rally into tomorrow and for the rest of this week perhaps. And the Qs really don't have as dramatic of a technical damage to sort of to repair itself. It did hold 170. Ideally we would go out you know, above 180 or so, and that would really kind of get us back above a lot of the shorter, even some of the shorter term moving averages, and break some of these downtrend lines. So that's a market to watch this week. If we can get a nice strong weekly close anywhere north of 180, I would say that's a very nice win for the bulls. Still, plenty of time from now until Friday. Lots of earnings, as you can clearly see by some of the movement we're getting after hours. So there's a lot for the market to chew on here. Again, volatility still remains fairly elevated. It's a two-way traders market, and you always want to just be managing that risk on both sides, frankly, of the trade. So that is those are the major markets there. Let's get into some other major markets. We'll go to TLT next, which on the week here is about flat. It saw that nice little rebound last week, up 1.27%. You can see, again, this downtrend is still very much intact, but we are in a reactionary mode here. We're bouncing up. We're still below this key, very important long-term support of 116, 117 that we broke down from. Until TLT can reclaim that, I would be suspect and be cautious here, looking to, be cautious here on the long side, so long as we are trading below this 116.80, this chop here from mid-September. I think it still is a seller's market here. It's a downtrend in these long-term Treasury bonds, but that can change. Evidence can, if we do see buyers step in here, we see a move back above 117, then I'll certainly change my tune. But for now, I'd be cautious. USO kind of sleeping here, up 0.5%, not doing a whole lot. It's below 15.25, still in the context of an uptrend, still trading pretty close to its year-to-date highs. It's still above all major trend lines here, and just kind of getting a pullback and waiting to see if buyers will step back in and continue this trend to the upside. So far, no major technical damage there. Natural gas rebounding a bit here this week as well, 3% to the upside. Most of those gains coming from yesterday's session. You can see we had this very steep trend line in place. We broke it late last week, and then you can see now we're trying to get back above it. Good volume still coming in here. Bulls remain very much in control. Finally, we'll go to metals, which have been pretty quiet this week. We're up about 0.5% here in GLD. We saw that late breakout last week above this consolidation. So we had this multi-week, multi-month flat sideways consolidation here. We broke out from it last week on heavy volume, and so far we are still holding above it. So bulls still very much in control there in the short term. And for silver, a little less bullish, but still bulls trying to make some progress here. It's holding up at the recent highs here. Hasn't quite got that nice clean breakout pattern like gold has, but still trying to hold up, trying to get off of these lows. And the more time it can spend off of those lows, the better ultimately silver will put itself in for some type of sustained recovery. So that is everything for this week's trading. Again, let's take a look at Netflix and the Qs here. So yeah, still holding up, down a few dollars, but overall things are still looking good, and we'll see if that gap can hold into next week. So as always, thanks so much for watching. You can subscribe on our YouTube channel every Tuesday and Friday for the market recap. Thanks so much, and talk to you later this week.